Let me ask you a simple question. If you could buy just one ETF, one that quietly outperforms most individual investors, requires almost zero effort, and gives you peace of mind for decades, would you buy it? Now, here's the wild part. This ETF already exists, and yet most people ignore it. In fact, according to studies from Morningstar and DALBAR, the average retail investor underperforms the market by a lot. Over the last 30 years, the average investor earned just 6% per year, while the S&P 500 did over 10%. Why? Because we panic sell during crashes. We chase the latest hot stock. We buy high and sell low. We try to beat the market and end up losing to it. But this one ETF doesn't do any of that. It just wins. Silently, consistently. The ETF I'm talking about is VTI, the Vanguard Total Stock Market ETF. And here's why it's beating 90% of investors. First off, let's talk about what VTI actually is. Most people have heard of the S&P 500, which includes 500 of the largest US companies. But VTI, it goes even further. It tracks the entire US stock market, over 4,000 companies. That's everything from Apple and Microsoft to small-cap stocks you've probably never heard of. So instead of trying to pick winners, VTI buys the entire game. You're not betting on tech or banks or energy. You're betting on the entire US economy, and that's a bet that historically has paid off big time. Let's look at the numbers. Over the past 10 years, VTI has returned an average of 11.6% annually. If you invested $10,000 a decade ago and just forgot about it, you'd have around $30,000 today without touching it. No rebalancing, no buying or selling. Just buy and chill. Compare that to most actively managed funds, which often charge high fees and struggle to beat even the S&P 500. According to S&P's own SPIVA report, over 90% of active fund managers underperform the market over a 15-year period. So when I say VTI beats 90% of investors, that's not an exaggeration. But what makes VTI even more powerful isn't just the performance. It's the simplicity. One ticker, one fund, one decision. And that simplicity helps you avoid the emotional roller coaster that destroys most investors. Here's an example. In 2020, when the pandemic hit, the market dropped over 30% in a matter of weeks. Panic was everywhere. People were selling stocks left and right. But VTI holders? Most just held on. Why? Because they weren't betting on Tesla or Netflix. They were invested in everything. And sure enough, by the end of the year, the market had recovered. VTI closed the year up 20%. It's not magic, it's just long-term exposure to the entire US stock market. And a mindset that says, I'm in it for the long haul. Now let's talk about fees. Because if you're paying 1% or more in management fees for a mutual fund or active strategy, you're getting robbed. VTI charges just 0.03% in expense ratio. That means for every $10,000 invested, you're paying only $3 per year in fees. To put that in perspective, the average mutual fund fee is around 1%. On a $100,000 portfolio, that's $1,000 a year. With VTI, it's just $30. That's money that stays in your pocket. Compounding over time. Let's break that down with some simple math. Imagine two people invest $10,000 each. One chooses VTI at 0.03% in fees. The other chooses an active mutual fund, charging 1%. Assuming both earn 10% returns before fees, after 30 years, the VTI investor would end up with $174,494, while the mutual fund investor ends up with $132,675. That's nearly a $42,000 difference just because of fees. And that's assuming the active fund even matches the market, which, as we've already seen, it probably won't. Now, I know what some of you might be thinking, but isn't it boring to just buy VTI and hold forever? Well, maybe. But boring builds wealth. Let me tell you a secret the wealthy already know. The best investments are the ones you can set, forget, and let time do the heavy lifting. The truth is, excitement in investing often comes at a cost. People get lured by shiny objects, crypto, penny stocks, meme stocks, and end up losing money. VTI isn't sexy, it won't double overnight, but it works. It's the tortoise in the race. And we all know how that story ends. Now let's go one step further. What if you invested consistently into VTI? Say $500 every month for 20 years. That's $120,000 of total investment. But assuming a conservative 8% return, you'd end up with over $275,000. And that's just the base case. Historically, VTI has done even better. This is why people who dollar cost average into broad ETFs like VTI are quietly building 6 and even 7-figure portfolios, while others are chasing the next hype stock and wondering why they're still broke. Now, some people ask me, should I just go all in on VTI? And the answer is, maybe. It depends on your goals. If you want ultimate simplicity, broad exposure, ultra-low fees, and historically strong returns, VTI checks all the boxes. But if you want income-focused ETFs like SCHD or tech-heavy ones like QQQ, you might combine them. The key is this: don't ignore VTI just because it's boring. It's boring for a reason, and that reason is long-term wealth. Now, before we wrap this up, let's compare VTI to 2 other popular ETFs. First, SCHD, the Schwab US Dividend Equity ETF. It's great for income. It yields around 3.5% and focuses on quality dividend stocks. But SCHD covers about 100 companies, mostly large cap, and misses out on small and mid-cap growth. VTI covers over 4,000 companies. Then there's VOO, the Vanguard S&P 500 ETF. Also great. Covers 500 large US companies. But again, VTI offers even broader exposure. In fact, between 2001 and 2023, VTI slightly outperformed VOO because it captured the small cap growth surge in the 2010s. So unless you have a strong reason to pick SCHD or VOO, VTI may just be the one ETF to rule them all. Look, the path to building wealth doesn't have to be complicated. You don't need 10 different ETFs. You don't need a PhD in finance. Sometimes all you need is one ETF, a commitment to keep investing, and the patience to let it grow, and that's what VTI offers. So if you're tired of chasing returns and ready to finally invest smarter, this ETF might be the one that changes everything. Thanks for watching Money Stick Unfiltered. If you found this helpful, make sure to like this video, subscribe for more Real Talk ETF content, and let me know in the comments. Are you holding VTI in your portfolio? Until next time, stay consistent, stay invested, and let the stickman handle the rest.